Hey everyone, Dalton Grados with Grados Capital here with another pre-market newsletter for this week ahead of July 7th to the 11th, 2025. And let's go ahead and start straight with the charts. We're going to talk charts, then we're going to talk fundamentals, and we're going to talk about some things that could potentially really impact the trajectory of this market this week. That's lately just been going straight up, but what could cause that to change? So first, let's look at the charts. We're looking at the ES futures, by the way. So I know that the SPX cash markets, the SPY, will have slightly different levels, but we trade the futures. So we're going to focus on the futures. So we have these levels that we have previously marked in previous newsletters. But as we can see, we've gone on this straight ride up to all-time highs, and then we've pulled back a little bit last Friday. So what are the upside targets here when we're already at all-time highs? Well, it's really just your big round numbers: 6350, 6400, and I would mark those for now. Now, on the downside, we have this previous high here, which we're kind of at right now, which we've already drawn. 6200, big round number, also was a period of consolidation over here. You see we've really hovered around that level, so I marked 6200 there. 6127, that was this breakout high here, and so that could be an area of retest. It was also an area of support over here. You see that? So we mark that, and then along down to 6,000. These are areas that the market should be areas of support or areas of targets. Should we get some downside action? Of course, we have had this gap remain from 5770 to roughly 5800. So a pretty big gap there that we have yet to fill. That would be a target should we get some downside. So that is basically our levels. We're at all-time highs. Now, we're looking at targets on the downside if we get it, but keep in mind the market can just keep going up. I have seen this many times, especially looking back to 2020 and 2021, where the market just kept grinding higher and higher and higher. And what's hilarious is being in this space is that all of the quote-unquote smart people, the people that went to business school, that majored in finance, that are your CFAs and CFPs, that are working professionally in the industry, they all seem to get very frustrated when the market just keeps grinding higher and higher with no significant pullbacks. They're like, it shouldn't be this high. Meanwhile, the quote unquote dumb people that are you could say dumb day traders, they don't have a formal education in the markets, but they just see the market going higher, actually just play the longs because the market's clearly going one direction and they end up banking, right? So it's kind of funny that's why I love the markets, is because it's like there's a lot of complexities and formal understandings and things you can go to school for, especially if you're in professional investment management, which I am. As a matter of fact, I work for a big Wall Street bank. But then to actually make money in the markets, you almost have to dumb yourself down sometimes, and just the market can keep being irrational longer than you can be solvent. So anyway, that's a possibility. But if we get some downside, then we look left, and these are our levels of support that we can look to target. Now, another target here is, now I don't have any moving averages on this chart. Maybe I could, I don't really use moving averages. Maybe I could add one. Let's see. Oh, here we go. Just to show you here, kind of what could be another target is, it added a moving average. Okay, it's a 9. Okay, 9 moving average. So a simple moving average, 9-period moving average, could also be another target here. The reason why I just added that just now is because you see these bars have just gone straight up, and so another pullback could be just to a moving average, which again, I don't really use them, but if you use them, then that would be another area to target, since we've just had this linear move straight up. And if we look at the NASDAQ here, NASDAQ futures, it's pretty much the same story, nothing different there. ES and NQ are moving pretty much in sync. So if you're like me, I like to trade the NQ, but often off of the ES levels when they're in line. You can do that here. All right, and looking at some fundamentals for this week ahead, we just have FOMC meeting minutes on Wednesday. And we have our regular unemployment claims that we get every week on Thursday, so we're looking out for those, 8:30 a.m. Thursday. But the meeting minutes, we already had our Fed rate decision. That was the big one a couple weeks ago. So these meeting minutes, I don't really think will move the market at all, but that's what's coming up this week. As far as earnings, I already looked at the earnings that are ahead, and there's no big companies reporting earnings this week. So a pretty quiet week for economic events and for earnings. Now, what could potentially move the markets this week? Tariffs. Tariffs could surge on July 9th because the 90-day pause is set to end. I talked about this in last week's newsletter, which you should subscribe to. First link in the description here, because I will often email in written on Substack my weekly newsletter. Sometimes I'll do a video like this when I have a little extra time. But either way, you get it sent directly to your email inbox, and it's totally free, no upsells, no catches there. But that's my newsletter. And last week in the written newsletter, we talked about this a little bit, and I want to highlight it some more. July 9th is the expiration for the 90-day pause that Trump had on tariffs. If we go back, remember back in April, we had this big, this was Liberation Day, and the days after that, that was this big drop, right? Trump announces tariffs. Then he announces a 90-day pause. That was back in April. It's July now. 90 days are coming up. So, what could happen? This is a little article that I read about, what experts expect to happen. We don't really know what's going to happen. The White House has not been super clear on what if they're going to be making any deals or announcing anything before July 9th, at least from what I've read. But so we don't know what's going to happen is the bottom line of this article. And, they're basically saying that the White House has said that they don't expect to extend the deadline anymore. They expect to stick to the July 9th deadline. But they've made some new trade agreements with, a lot of countries, China, UK, Vietnam, while the status of others remains under wraps. And then we have, under the April 2nd tariffs. So we had a 10% universal tariff with a 90-day pause on those, what were they, the reciprocal tariffs. That was the big scary chart that Trump had in April that caused the markets to go down. And so if that pause is up, some other nations would be subject to, Cambodia would be 49%, which would be a huge jump. And so on and so forth. I mean, I'm just kind of skimming through this article, but basically, we don't know if, what could happen next. So if no action is taken by the White House, higher rates automatically go into effect on July 9th. So basically, they would just automatically be hiked up. That pause would be over, and you'd have those high rates kicking in. If he makes deals like he's done with the UK, pulls them out of the whole mess, their deal stands. So if he comes up with other deals, countries to fail, comes to terms with Trump's administration, potentially face a large tariff increase. Trump has threatened EU members. So anyway, bottom line, we don't know what's going to happen July 9th. Could cause a stir in the markets. Now, I'll just tell you what I'm going to do, though. If we do get... Okay, this is my stance. Let's go back to ES. Okay. I don't think... Now, this is my opinion, okay? I don't think any more tariff news is going to be more shocking to the markets than this. This Liberation Day was, in my opinion, the most shocking item around tariffs that the market has now absorbed. The market has priced this in. So, if we get some more shocking news on July 9th, and maybe the days to follow, this week, I am going to buy the heck out of that for my long term. Because again, some shocking news could bring this market down, hopefully get some pullbacks, maybe in the 6,000s. But my bet is that whatever happens is not going to be more shocking than April. And so that is going to be a very viable dip for the long-term portfolio, in my opinion. These are just my opinions. I don't give advice. So that is the newsletter for this week. And here's our levels to look out for. We've got some news events to look out for. We have our game plan. Of course, let's not be surprised. Let's not rip our hair out if the market just keeps grinding higher. We've seen this happen before. Higher prices attract buyers, not lower prices. When the average retail buyer of the market sees on CNBC that markets hit new all-time highs, they get FOMO and want to buy, which drives the market to go even higher. So it's not lower prices. When prices are lower, even though, you and I want to buy that. I mean, at least I do. I'll speak for myself. I want to buy the lower prices because we're smart. The average person gets scared of lower prices. They see the headlines, markets are down, they get scared. And working at a big institution, I can tell you that the average, doctor or dentist or, person that engineer or someone that doesn't work in the space and just has their retirement accounts, they are calling in panic selling when the markets are going down, which you and I know it's like the exact opposite of what you want to do. But that's what happens. It's human nature, right? So when markets are down, people sell. And when markets are up and reaching these all-time highs, people want to buy. Even though I look at it as an unfavorable entry, it's just the psychology of masses. So anyway, bottom line is these prices attract buyers. They don't attract sellers. All right. This has been another weekly newsletter. Hope you enjoyed it. Don't forget to subscribe to the newsletter in the first link in the description. And like, comment, and subscribe to the YouTube channel as well. I'll see you guys next time.